Welcome back to the final round here on Yahoo Finance. I'm Shauna Smith, with just around 30 seconds left in the trading day. Stocks starting the shortened trading week with another sell-off, with the Dow off over 2% right now, just around its lows, slightly off its lows of the day, off over 600 points. S&P off just around 2.7%, but the majority of the sell-off, and this is what we saw last week, is being led by a lot of the big tech names. NASDAQ off just over 4% today. And that does it for the trading day today. Again, all three of the major averages posting pretty substantial declines. Dow and S&P both closing off over 2%, S&P off just around 2.8%, nearly a 3% decline there for that major average. The Dow closing off just around 630 points. That's a 2.2% decline. The NASDAQ, though, that's where we've seen the heaviest selling. That continues to be the case today, with the NASDAQ closing off just over 4%, falling below 11,000. It was just, 3 trading sessions ago that we were above 12,000. So significant declines over the last 3 days for the NASDAQ, and the Dow just around 27,500. Taking a look at some of the biggest underperformers in the market today, Apple, obviously a notable loser, with that stock closing just around its lows of the day, off around 6.5%. And Microsoft, another big tech name there, off around 5% today. Some of those momentum winners that we've been talking about over the last several months continued to see selling today. Zoom, for example, closing off just around 5%. DocuSign, Salesforce, those are the 3 stocks we focused on Friday. All 3 of those names closing today off just around 5%. And then taking a look at the sector action, you can really see the broad-based selling that we are seeing today. It's not only in the tech sector, although that is where we are seeing the most selling, but some of those cyclical trades like financials, industrials, materials, all posting significant declines. We have industrials and materials both off nearly 1.5%. The banks off nearly 2% right now. But I want to bring in my co-host, Miles Udlin. We're also joined by Rick Newman, Akiko Fujita, and Jared Blickry to break down today's action for us for the next 60 minutes. And Miles, start of a new week. It's a shortened trading week, but it looks like similar action to what we saw on Thursday and Friday.
Yeah, I mean, this in no way did this feel like the beginning of a new week, but rather the continuation of what we saw Thursday and Friday. And I would just draw your attention to a couple of areas. One that Jared just flagged for us, which is that Tesla recorded its worst ever single day decline, off 21% during today's trading session. Now, obviously, some news there. The GM and Nikola story, not a positive for Tesla, but that has been really the poster child of this market rally, whether it's Robinhood traders getting involved, whether it's weird things happening in the options market, whether it's shorts getting squeezed out of their positions. The Tesla stock story has really had it all over the last year or so. And so now with the stock very quickly 30% off of its record close, I think it's certainly going to be having a lot of people's attention. I remember not too long ago, I think it was just before the pandemic, Tom Lee had this theory that people were buying Tesla because they were performance chasing their benchmark of the Russell 1000 growth index. I mean, sure, it's possible. Tesla shares then doubled from that price, which seemed great. I think they almost tripled from the price at which that theory was thrown out. So the stock has really kind of had any possible theory thrown at it. And here we are yet again with a new kind of, superlative, I guess we could call it, when we're discussing shares of Tesla. And then also just what happened with the banks today, because we saw the banks, as our last guest, John DeVia of Astoria Advisors, he's outlining, the classic early cycle pro-cyclical trade. Well, the banks, the KBW Bank Index off 3.5% today. That thesis certainly challenged on a day when we're supposed to be seeing tech sell off at the benefit of some of the reopening trades, as it were. But with the 10-year coming back down again off about 4 basis points, back below 70 basis points, we see banks under pressure. And again, we continue to see all sorts of ideas about where the market is headed challenged over the last 3 sessions with, the only thing we know for sure is that we definitely have had a 6.5%-ish decline in the S&P, and the NASDAQ has almost fallen 10%.